So problem 2 has to do with unit sales. It has to do with operating income, targeted operating income to be exact. It used variable costs and it used fixed costs. So let's look at the problem. The current sales price is $80 per unit. The variable costs are expected to increase from $65 to $67.50 per unit. The fixed cost of $300,000 will not change, and the problem is asking how many additional sales units are needed in order to maintain an operating income of $360,000. Okay, again, it's a word problem. You need to pick out the puzzle pieces and determine what you need to do. So the question is asking how many additional sales units are needed. So right off the bat, that tells you that you're going to need a starting point and an ending point. The difference is calculating for additional sales units. The other portion of this section is, and it says, in order to maintain an operating income. So this is telling you that you have a target operating income that you're looking at. You're maintaining an operating income of $360,000. So maintaining an operating income means target operating income. So now you know we're dealing with target operating income. So we have current sales. So we know we have a current sales. And the second statement says variable costs are expected to increase. So we have a current, and then we're going to have a new or a projected. New or projected works either way. In this case, it's considered projected, but you could use new also. Just know that you have a current, and then it's going to change, so it's going to be a new. Okay? So in this case, we need to calculate the new or projected unit sales. And I'm going to start with the new one because it's asking for the additional sales units. So if I'm going from current and I'm increasing, I need to know how many additional, so stands to reason that my new or projected unit sales is going to be larger than my current sales. So I'm going to do it in that order, so I know that I'm going to take my projected unit sales and I'm going to subtract my current sales, which will give me my additional sales. So let's just put it out there. Projected unit sales minus current sales should give me the additional sales needed. So this way it allows me to maintain the order in which I need to keep my numbers. So the first step is we're going to calculate the projected unit sales. And your formula for that is going to be fixed cost plus targeted operating income divided by your contribution margin unit. So let's look at the information that we have, and in the problem it states that our fixed costs are not going to be will not change. So we can pull out the fixed cost, $300,000. Plus, and we said that the maintaining operating income is actually targeted operating income of $300,000, or excuse me, $360,000. Excuse me for a moment. Okay, my apologies. Okay, so we're calculating projected, that was my unit sales. So we have fixed cost. We have $360,000 of targeted operating income. We're going to divide that by the contribution margin unit. Now, we don't have the actual contribution margin unit. It was not given to us. So another formula that we need is contribution margin unit equals unit price plus unit variable cost. So, do we have that information? Now, in the problem, it tells us that the variable costs are expected to increase from 65 to 67.50. So from 65 would be the current, to 67.50 would be the new or projected. Since we're working on the projected, we would use the 67.50 because that's what it's increasing to. So, and we have the current unit sales. So we can actually plug this in to our formula and still do the calculations. So we have $80 unit price plus $67.50 of unit variable cost. Which when all said and done, you have 660 divided by 1250. So you're projecting unit sales your projected unit from sales is 52,800 units. Now we're going to calculate current unit sales. I'm actually going to copy and paste this because it's the same formula. Just a few changes. Okay, so the same formula. The difference being that we're working with current, and we're calculating the current unit sales. So we're going to start with the from 65 for the variable cost. Which gives us 660 divided by 15, which gives us 44,000 units. Okay, so the last step of this problem is first formula above. $52,800 projected unit sales plus 44,000 current unit sales equals 8,800 additional sales or unit sales needed. So this is answer to number 2.